Welcome back to another weekly episode, guys. So just a quick reminder, the next weekly update will be coming out on 2nd March. We also have a trading session that is on a Saturday. It was announced today. So please make note of it. And if you have doubts in this particular video, please bring the same on Saturday itself. That is the day the video is released. Last week's doubt I have answered. If there is some question that is left, you can bring in this particular video. So today's talking points are pretty much clear. I'll be talking a lot about what is time correction, price correction in the current market context, how you can use this. I'll also be revisiting the stock quadrant that we have been following since December 2023. Why you again shouldn't be buying anything bulk in the market that is in the bulk. It was pretty clear last 15 odd days when stocks were falling left and right 25-30%, and the periodic corrections, why these will be the norm. So the first thing we'll begin with is understanding the intricacies of sector rotation with the help of current example. So there are three phases that have played out between January 1st and something like Thursday. I'm actually recording this on Thursday. Tomorrow again I'll be traveling, so Friday's market action I won't be able to cover. So what has typically happened is there are three phases. One is the correction phase, consolidation phase, and the leadership phase. Now pretty much a lot of interesting things have happened in the last 15 odd days. Correction. If you look at the broader market indices, something like Nifty, Nifty 500, Nifty Total Market Index, these have corrected something like 4.8 to 5.2% only. But if you look at the broader market, that is mainly the defense name, railway stocks, infra, PSE, new age businesses, and a lot of newly listed companies, these were down more than 25 to 35%. All right. Then came the consolidation phase. Again, the broader market corrected by 5%, but which are the sectors or the pockets in the market that escaped a larger fall that happened? It was mainly oil marketing companies, energy sector, also some portions of auto sector, PSU banks. Why this is important, I'll tell you later. Then the leadership phase. Now you've suddenly seen yesterday, that is on Wednesday, 14th of Feb, you saw massive recovery coming on intraday basis in the market. Yes, indices moved up 0.5 to 0.7%, but stocks just started moving up with really strong momentum, and especially this particular space here. So these were the first stocks that were actually breaking out well before the index. So naturally, these become the next leaders in the market. A lot of these names I had explained in terms of the stock quadrant. Again, I'll revise those specific names and I'll show you some visualizations about sector rotation. So the first thing is I will use index as a base reference to understand what is time correction and price correction and why it is important in current times. So here is a chart of Nifty. If you look, the momentum phase began in November. Then we are broadly in this flag structure. Within the flag structure, we had a cup and handle which actually got triggered yesterday. That is 14th Feb. Beautiful momentum coming back in the market. But this is largely a time correction. Why a time correction? Because at the start of the year, Nifty was at 21,800. About 45 days later, that is around 15th Feb, the index is at 21,849. So this is time correction that is happening, where more or less price moves in a range, up and down, frequent gaps happen on the chart. All right. Now, this is the chart of State Bank of India. So look at this and look at this chart. Again, a time correction and a breakout here. SBI was one of the first stocks that broke out in this rally. Why? Again, if you've been watching my videos carefully, from December 23, you would have got an idea why SBI was one of the first counters to break out. What happened here? Momentum, then sideways consolidation and a breakout. Meanwhile, look at what Nifty was doing in February. In February, Nifty was moving lower, and look at SBI. SBI was moving higher in February. It's a clear sign of accumulation of relative strength. I'll come to those points at a later stage, but I hope you understand what is time correction. Another banking stock. This I think is for Punjab National Bank. Again, look at the trend, look at the momentum, then some time correction. some price correction also, but then eventually breaking out into new highs or new 52-week high. So broadly, what happens in time correction is that index remains in a range, whereas there are a lot of pockets in the market that form a base and attempt to break out. And those pockets become the leaders of this leg of the market. They don't necessarily become the leaders of the entire bull market, but they become the leaders of this particular leg of the market. Now we'll come and understand what is price correction. For understanding price correction, I'm again using an index as a base reference, which is Nifty Bank. Now Nifty Bank in the corrective move from Jan 2024 fell about 8.7% or roughly about 4,500 points. All right. So in this particular thing, you see at the start of the year, Nifty Bank was at 48,600, but at the time of recording, it was at 46,000, with the low being made at 44,500. So it's about a 4,500-4,000 range kind of Nifty Bank. Again, roughly 10%. This is price correction. Now something interesting happened in this particular last 15 odd days. You were seeing all these spaces that were overvalued and that had a lot of outperformance. Let me quickly take you through that chart so that you can understand what I'm talking about. Overvalued outperformers in this particular cycle, namely, I'll come back to the chart later. This is the chart of something like SJVN. All this power theme, the railway theme, the defense theme. Look at what has happened to these stocks. All the stocks that were owned so much, that were outperformers, but valuation wise, they were super expensive. SJVN fell a flat 41%. All right. There are countless examples, but I've just pulled out two examples which broadly fit the mean of what happened, mean correction that happened. This I think is the chart of, if I'm not mistaken, RVNL or something. This has fallen 35%. From the top of 340 to something like 220, and this has all happened in the space of like 14 odd days. All right, which brings you to an important point, that between January and February, what has essentially happened in the market is the template that we had discussed way back in January 23, that is December 23 and January 24. That risk reward in the market currently is more favorable towards undervalued underperformers as opposed to overvalued outperformers. And what interesting thing has happened in the market is that undervalued underperformers, which were mainly the likes of SBI, all marketing companies, other public sector banks, these oil marketing companies like BPCL, HPCL, all these are trading at single digit PE valuations, and they just did not perform a lot. Even for that example, market leader Reliance, it had not moved a lot. It was underperforming. And if you take 2-year forward guidance of Reliance, it is relatively undervalued. It is not that expensive at all. Certainly not when you compare with the overvalued outperformers space. And this particular quadrant, if you see, is so true in terms of what happened in the market in the last 20 days. Where have you seen massive correction in the market? It is actually in the overvalued outperformers space. This corrected between 25 to 35%. Now, undervalued outperformers, these corrected relatively less, which is 15 to 25%. Mean correction here was between 5 to 7%. And this particular space, that is overvalued underperformers, this has also fallen about 20 odd percent, 15 to 20%, but this is still consolidating. A fresh breakout in this particular space has not happened yet. So what happened, you have to understand. Now this chart that I'll share is pre-February. That is when I started talking about the quadrant, what was happening. I've taken up two pockets in the market, that is two quadrants in the market, so that you can clearly understand and visualize what actually happened. So at the beginning of the year, ERCON, RVNL, IRFC, or those kind of names were actually leading the market. This is the RRG Quadrant that I've shared many a times. Just Google RRG on Wikipedia, you will come to know what it is. This is not exactly the quadrant that I give out, but it is a good tool to visualize what has happened in the market. And whereas the likes of PNB, BOB, SBI were all relatively lagging because these were underperformers. Now, what has happened in the last 15 days? Take a look. In the last 15 days, the leadership is now being taken over by SBI, Bank of Baroda, PNB, and the similar kind of stocks that belong in this particular quadrant. this quadrant out here. So this is the sign of leadership, whereas these stocks have begun to correct a lot. And it is this particular pocket that is now attempting. Again, one more example I have to pull out. Pre-February, you take a look at what was going on in energy space. Hind Petro, Oil India, Reliance, BPCL, apart from MRPL, everything was here. And what was leading the market? It was ERCON, RVNL, IRFC. I hope you get the gist of it. And look at what has happened in the last 15 days. What has stepped up? It is Reliance, Hind Petro, Oil, BPCL, MRPL is beginning to move up. Whereas these particular spaces that were severely overvalued and that had outperformed a lot saw a lot of correction in the market. And why is that? It is because these were the spaces where there was maximum amount of money in the market, and blind kind of momentum was going on. People were chasing these spaces, and when a lot of people chase one given space in the market, that is when things tend to correct a lot. Now, whatever has happened in the market is healthy. Let me explain why it is healthy. It is healthy because while the broader market, something like Nifty, total market, Nifty 500 index has broadly remained in the range, Nifty has broken out yesterday again. It looks really good to rally further, at least to 22,133, and I think it will break out of this range and head into all-time high. At least that is what I can see today as of Thursday. That is 15th February. You'll be watching this video on Saturday, which is 17th February. So I feel Nifty is in a very good structure as of now. I've just taken a screenshot. It's at 21,849. Looks good. But what has happened in this is that stocks that were undervalued and had underperformed have actually taken leadership to take Nifty higher. Whereas stocks that were overvalued and had outperformed, there was a lot of froth in that space that has actually cooled off. A lot of massive shakeout has happened. I can tell you when stocks like SGVN or RVNL are falling 35-40%, all the people who have come out here would have clearly exited and moved out. That is how stock market functions. And this is where I feel the overall correction in the market has been so healthy. It has actually made the market more healthy. So now how should you, move forward? The first thing I'll tell you is, if you missed out in terms of what I was explaining in the last week of December and first week of Jan, that your attention has to be here, where returns are high but probability of risk is low. If you've missed out and you have not gone behind the stocks or the sectors that were falling in this particular space, and you did the mistake of being here, you can course correct yourself. First, let some of these names pull back. When it pulls back, it will be an opportunity for you to get into spaces that are undervalued and underperformers. But this space, because there has been a lot of shakeout in this space, I would now tweak my strategy a bit for 24. At the beginning of 24, I told you I would like to be here. But now I would also like to look at these spaces in combination with this space. Because this particular space is when in December, Jan, I was building positions. But after these spaces have corrected, that is this space, outvalued outperformers, these are usually high PE stocks, high growth stocks. Since they have fallen 25 to 35%, in some cases 40%, they've shaken out a lot of people. And when they shake out a lot of people, then you get a new opportunity in terms of entering and riding the trend in some of these spaces where the trend is already strong. These are monthly trends, weekly trends that don't go just out of the window like that in the market. It takes some bit of time. So I definitely feel that these spaces, defense, railway and PSE that were getting overheated, they've fallen 25 to 35%. And this is a space that can also be looked into. But over the next 12 months, I still feel it is the undervalued underperformers in the market that have begun the leadership that will outshine rest of the market in general. Now, how does a typical cycle evolve in the market? You'll also get a question, how do you participate in these names? Because these names have fallen a lot. Some have had V-shaped recovery. I'll come to that in the last part of the video. Now, how does a typical cycle look like in the market? See, when a bull market begins, now you can take 2020, that is bottom of COVID, as the beginning of a new bull market, and analyze what I'm writing here. At the beginning, it's the momentum phase where almost everything heads up initially. This is where the leaders of the bull run are defined. So the PSE, PSU stocks, defense name, railway names are all defined in the year 2020, 2021. Year 2 is when continuation happens in the market. Now these leaders continue to get stronger. They continue doing well. A lot of buzz is created, a lot of tweets are done, a lot of YouTube videos come out, and that is when the mass, that is the general retail kind of population or the newer players in the market, they start getting into these names, which we have largely seen, I think, from December 22 to something like December 23. The next phase, which I think is the December 23 to December 2024, is where money starts chasing value while leaders consolidate and correct. If you go back to my previous videos, I had given out a slide that this is a year where we are going to have massive amount of shakeout, continuation, this particular slide, and even on a daily and weekly time frame. It will be a year of pullback. Markets will be scary. What you have seen in the last 15 days is exactly this. And unless and until you have done your homework, prepared for your watch list, you won't have necessarily been able to capitalize in terms of buying into the quadrants where you should be buying. If some of you have done it, fantastic. I'm really happy. It means you're doing your homework. If you haven't, just pay attention. I'll show you how to catch up. So year 3 is where money, that is the current year, I feel money has already started chasing value. That is underperforming stocks, undervalued sectors, but with good businesses, a good management and those kind of things. Whereas the leaders, the defense names, railways name, I'm pointing to these sectors because these are the ones that have run up so much. PSE names, these will consolidate and correct and will set up probably later at the third quarter or maybe the end of second quarter this year. July, August, September, maybe that is the phase. I'll update about it. And the last phase is where these leaders plus the value buys, which means the leaders and the underperformer kind of a sector that is undervalued, these two get together and form the last phase of the bull run, which is called the last hurrah of leaders. Value space rally as well, and both spaces finally exhaust and bring top to the market. So this is what, in this particular phase, you please include micro caps, small caps, and those kind of things also. I hope this particular part is clear. So broadly, this is where, I think this is where we are in terms of in a bull market cycle. There is a larger bull market cycle also that is playing out in India. I don't want you to get confused in that. That is why I don't want to highlight that. Someday I'll do a larger cyclical video to show you where I feel we are. Now comes the topic, how do you get back into some of the momentum kind of winners in the market, that is the outperforming names that have fallen 25-35%. How do you get into it? See, most of the stocks would have had a V-shaped fall, then they will form this kind of a range. All right, the moment they have a breakout above this range, that is when you go behind it. There is a second pattern also. The second pattern is you'll see that the broadly index, I'll take example of Bank Nifty. In Bank Nifty, if you see index has fallen about 4,500 points, then it is stabilizing at 46,000. Now, how do you identify the leaders in Bank Nifty? Look at the charts here. Look at this chart. This is a PNB. Look at what Bank Nifty is doing, where it is with respect to all-time high, 52-week high. Look at what PNB is doing. It is already breaking out. What does this tell you? This tells you PNB is one of the leaders in Bank Nifty. Since I'm taking some names, I have to make a disclaimer, disclosure. The names do not mean you have to go ahead and buy. Please consult your financial advisor. Whatever names I take in my videos, whether it is past, present, please assume that I have positions in it, vested interest in it, and those kind of things. I just have to do this because of market regulator SEBI, and rightly so. All right, look at the next name. It's Canara Bank. What is Canara Bank doing? It is already above the all-time high or the 52-week high. And look at where Bank Nifty is. It is languishing here. The third example, State Bank of India. This is something I've covered many a times. Go back and listen what I was saying about State Bank of India when it was between 600 and 650. About why an impending move is there in this particular space. Go back and see why um, when the world was going crazy about railway stocks, defense stocks, I was paying attention to spaces that haven't moved. There is a message there. That message is about how bull markets continue, how bull markets progress usually as time moves forward. It's not always linear. It's not always easy to see this. When this shakeout happened last 15 days, even I exited a lot of counters. I also did a lot of things. So, generally we all move in the same direction as the market takes us. It is just that you have to understand and be strategic about what you have to do in terms of this particular quadrant that I explained in this particular year. I've never shared this before. I've shared this because this is the first time probably in many years that I'm doing a sequence of videos covering bull and bear markets. So this is the reason I've put this out, for the first time here. So again, my bet will remain with a combination of undervalued underperformers and now overvalued outperformers because they are corrected 25 to 35%. A lot of these names, whether you want to add to your existing positions or you want to build fresh, follow the concepts that I'm explaining in terms of identifying which of the stocks are the leaders. Not every stock is going to bounce back. There are stocks that will bounce back and fall back again. But the true leaders will always take out their all-time high and 52-week high level. All right. So I'll see you guys on 2nd March. Please make sure your query comes in today itself so that I can take out time and answer the same. So have a great weekend ahead. Take care and be safe.